If you've been trading for a while and you're not having the success that you want to have, it's a good chance that you're not using options the correct way. Or maybe you don't even know about options, but even if you are using options, it's a good chance that you're not using them the correct way. When people think about trading or investing in the stock market, the first thing they think about is just buying low, selling high. That's the first thing that they think about doing is, can I buy this at a good price and can it continue to go up? Or do I have what it takes to spot a good company that may have been beaten down, sold off, and will is destined to rebound? A couple companies that come to mind that this happened to, Facebook is one. Company was beaten down several times during the elections with the fraud and the fake ads and then the fake news. There's just been several different times where Facebook stock has got smacked down, but it's temporarily. And so the stock ends up rebounding and coming back to glory. So that's the one trick that most people have in their sleeve. Can I buy low, sell high? Either a good stock that can continue going, or a stock that's used to be good, got beaten down, and can come back. And they don't even know about options. And the problem with that is stocks don't always go up; they go sideways and they go down. And most people don't have a strategy for those other two directions. But when you take it a step further and you look at options, options really gives you an edge that no other trader has. Anything that you fear in the stock market, anything that you fear. So if you, I listed a couple things that I'm going to walk through that most people fear, but almost anything that you fear happening to you in the stock market, options has an answer for it. So even if you've traded stocks before or you traded options before and you lost money before, options has an answer for it if you get past the basic beginner stage of options, which is maybe buying and selling calls or puts, and you start to cross over into advanced options. And when I say advanced options, I'm talking about advanced strategies like being a seller of call and puts. I'm talking about even more advanced strategies where you start to do spreads, iron condors, using basically two options or more. And when you get to that advanced stage, which most people never get to, they just stop at buying low, selling high stock, hopefully, or they go to gambling with calls and put options, but they never really think through how to use them in an advanced way. So think about this. When you start to trade in the stock market, a couple things that people either fear or typically happens to them immediately. And so one of the things is you buy the stock and it starts to go against you. You ever felt like that? Like the moment you buy the stock is the moment it turns around and goes the other way. You're like, it can go up every single day, but the moment I decide to buy the stock, that's the day that it goes against me. Well, if you have a history of that happening to you, there's a option strategy where you can get the stock at a discount, meaning if I don't get it at a cheaper price, you can get paid for trying. So you'll one of two things will happen. There's an option strategy where if a stock's trading at 100, you're like, I want the stock at 95. And you'll get paid for trying to buy it at 95. So two things will happen. You'll either buy it at 95 and you'll get a discount on top of that. Or if you don't get it at 95, you'll actually get paid for trying to buy it at 95. Now you might be thinking, Jason Brown, well, what option strategy is that? Well, you're gonna have to tune into the next episode where I talk about the exact and specific option strategy. I just want to walk you through how advanced options can first protect you from mostly anything that you think that could go wrong in the stock market. Another thing that happens to most traders is they bought a stock at the right time. So perfect. You bought it at the right time and the stock is going up, but you're like, I don't want to sell it because I think I can make more money. And then ultimately the stock ends up eventually turning around and selling off and going against you. Well, there's an option strategy where, and we call it the fear and greed, right? You fear missing out, you're greedy, you want to make more money. When those two emotions kick in, there's a way to be greedy, but be greedy responsibly. And so there's a strategy that says, hey, I've made a little bit of money. I want to see how much more I can make. There's an option selling strategy where you can sell an option against either the stock you own or against another option that you own. and you can kind of lock in the profit that you can potentially make, but also bring in a little bit more profit if it continues to run higher so you don't feel like you're missing out. But all too often, the stock turns and goes against you, and you end up giving a profit that you had back. There's a way that you can lock that in and minimize that happening to you by being a seller of specific options, depending on what option you own, depending on what kind of stock you own. The key here is knowing that A, a strategy exists, and then B, when and how to implement it. The other thing that happens to traders is that they buy the right stock, but they buy the right stock at the wrong time. And then it begins to sell off. We kind of talked about that. The moment you buy it, it goes against you. Well, there's two different types of buying and it goes against you. Sometimes people buy the wrong stock, meaning they go gambling, they go on Reddit and these forums and they buy meme stocks or stocks that never really were good and they go against you. But what happens when you buy the right stock? You're like, what just happened? I bought Apple, I bought Google, I bought Amazon, and it just went against me. There's option strategies where not only can you get paid to buy the stock at a discount, but you can also bring in some money while you're waiting for the stock to come back. And so you're like, oh my gosh, I'm down. But if I'm down on the stock, I'm up over here because there's an option strategy that can pay me to wait. So most people just wait for the stock to come back to say, can I break even? And then once I break even, can I hopefully go a little bit more higher? But there's strategies where you can come out the gate profitable, especially if you bought the right stock, but it just went against you. We call that the getting paid to wait. And so there's a few different things that, and that's more so on the stock side if you're a stock trader. But let's talk about if you're an option trader. There's a couple different things that you go through as well. And on the option traders, sometimes the negatives or the downside of being an option trader can be worse than the downsides of being a stock trader. Because if you own a good company, a lot of times you're like, I believe in this company. I can wait for it to come back. I don't have a time limit or expiration. But as an option trader, if you just buy straight options, you have a time component to where that option can expire worthless on you. And if you've ever had an option expire worthless on you, you know that is not a good feeling. You put up $1,000, $2,000. You thought it was going to go in a certain direction and it didn't. But you're like, I got 30 days or 2 months. And in that 2 months, the stock goes sideways or down or just not the direction that you thought. Time ticks away, your intrinsic value or true value of the option ticks away, and you end up with nothing. And there is an option strategy for that. So again, when we talk about the basic person, they just buy a call, buy a put, and they sit back, they wait, and they hope. When you think about an advanced option strategy, there's an option strategy that says, I can maybe even bring in 50% of the money that I put at risk. So that way, if the stock continue going in the direction that I think, I can make 50% up front on this option. Or more importantly, if it goes against me, I can limit my risk by up to 50%. And it's just about knowing how to manipulate more than one option to create these financial models. But when you only know how to buy one option, you got one direction and you better hope the stock goes in that direction and in the time frame that you want it to go into. And if it doesn't, you're out of luck. And that's why it's so important to graduate and start to say, okay, how do I use two or more options to start to construct these financial models? So that way I'm never in that position where as soon as I buy an option, 30 days, 60 days later, if it doesn't go my direction, I lose all my money. You can be in a position where even if the option expires worthless, the other option offsets it by up to as much as 50%, depending on the strike price, the expiration date, and how you manage the trade. Similar to owning a stock and it goes up, you ever owned an option and it went up? And so maybe you've had this happen to you. You bought an option on a Monday and you have 60 days on this option. And so the stock moves up Tuesday and Wednesday, and your option is up 10%, 20%. In your mind, you're thinking, if I'm up 10 to 20% in 2 or 3 days, well, how much am I going to be up in 2 months? And we've all been there before. We like, where I'm up today, I'm up tomorrow. wow, in 2 months, I'll really be up. And so in your head, you're thinking, I'm going to ride this out. I'm going to make a killing in 2 months. And maybe those first 2 days or the first 3 days were like the best days of the stock. And every day after that, the stock starts to move down. And so you went from, I have 2 months, how much money am I going to make? To maybe 2 weeks, 3 weeks later, you're like, whoa, I only have 30 days left. If this stock doesn't turn back around, I'm going to lose all my money. And so there are option strategies to where when your option goes up that quick in the first day, second day, third day, or even the same day, there's option strategies where you're like, hey, I want to lock in this profit and minimize the risk of the stock turning back around and going against me. Or there's option strategies when you start to combine more than one option together where you can say, even if this goes against me, I have a chance of making more money from the stock falling than I do from it continue going in the direction that I thought it was going in. But these strategies are only available to those people who understand how to use more than one option strategy. Let's talk about some of the emotions and outside factors that happen with trading. So let's say market volatility. Some news report comes out, the Fed speaks, a plane goes down somewhere, Russia Ukraine war pops up out of nowhere. All of those things cause the market to be volatile. Stocks could be going up. All of a sudden, some news comes out, they go down. All of a sudden, some more news comes out the next day or next week. Stocks turn around and go back up. And so what that can cause you to do is jump in, and when things are going well, then they turn around, you get out, then as soon as you get out, they turn around and go back up. And you don't even know how to deal with that volatility because every day you're confused. Should I be long thinking things are going up? Should I be short thinking things are going down? And with advanced options or spreads in particular, there's a way to construct a strategy to where you don't really care about the market volatility. You're kind of direction neutral, meaning like you don't really care if the market goes up. You really don't care if the market goes down. As long as it doesn't go up too much or down too much, you have a strategy in place to make money whichever direction that the market goes. I know it sounds like, wait, wait a minute. You mean to tell me I can have a strategy that I can make money on one of the trades, no matter which way the market goes? Yes, that is what I'm telling you. There's strategies to where you're neutral on the direction. And that's where most people get it wrong. They're like, I got to pick if the market is going to go up. I got to pick if the market is going to go down or a stock is going to go down. That's where the word kind of stock picker comes from. People are trying to get good at picking if it's going up or picking if it's going down. But what if you could remove stock picking altogether? And you're like, I don't care if it goes up or down. I have the correct advanced option strategy to make money, at least on one, if not both options or the stock and an option, regardless of which direction that it goes in. And that's what this really is about. I'm trying to open your mind to the fact that you can be profitable at least on one out of two trades by understanding and learning these advanced option strategies and remove yourself from being an all or nothing person. I'm either going to make all the money or I'm going to lose all the money because that's how you end up blowing up your account. We already talked about emotional decision making, fear, greed, panic, fear you're missing out on the going up, fear that it's going down. You should get out. You're going to lose all your money. As soon as you get out, it turns around. But let's talk about another emotional decision making, which is like over trading. And over trading comes in when maybe you get overconfident. You had a trade that went the direction that you want. And let's say you had a goal of making $500 a month and you make that $500 in your first trade. And then you start to think, wow, if I made $500 in my first trade in the first week, if I could do this every week, I could make $2,000 this month. And maybe your goal was only to trade once, maybe twice a month. You got a full-time job, you got a family, you got other obligations. So you don't want to be tied to the computer. You don't want it messing with your emotional stress while you're at work because you're worried about losing money. So you're like, I'm not going to overtrade. I'm just going to take 1 to 2 trades a month. But what happens sometimes is if you make that money real quick in the month, like the first day or the second day of the month, and maybe you make the second trade on the third or fourth day of the month and you did it all in 1 week, you start thinking, wow, if I could do this every week, I could be a gazillionaire. I could be richer faster. And so what happens is now you start to overtrade, meaning you go into every week looking for 1 to 2 extra trades to try to get ahead, and you start overtrading. And the way that advanced options or spreads can start to minimize you from overtrading is, number one, you can go into a trade saying, not only did I make the money that I wanted to make, but let me pull ahead, let me lock in this money. And so if things go well, great, it's already locked in and I'll make a little bit more. But if things go bad, I don't give it all back. The other thing is when you're using two or more options, you're usually agreeing up front how much money you're willing to take in. And so it's hard to overtrade because you're already committed on maybe two different, a stock and an option, or two different options. You're already committed. You've already accepted this is how much money you're going to take in. And so at that point, you're just waiting for expiration, or you're waiting for the stock to do whatever it's going to do because you've made whatever you're going to make, which kind of prevents you from over trading. At least it can give you the satisfaction that I'm in these trades. I've already milked it for as much as I can milk it for. I've determined upfront how much money I'm going to get. And typically the money is tied up in those two trades to where you can't just go do another trade. You have to wait for the expiration for that full profit to be realized. And so it can be used as a form of trade management or over trade management so that you aren't just jumping into a whole bunch of things because you're okay with what you're already in. You've already accepted the profit that you're going to take. And now you're just waiting for that clock to run out, which sometimes could be 30 days. Sometimes it could be less than that. Risk management. Advanced options, so using two or more options, is the ultimate risk management strategy. It is the ultimate because think about it. If you just buy stock, if the stock starts to go against you, you immediately start losing money. You don't really have another bullet in your gun that you can shoot to minimize the risk. And I've seen people buy stocks that have went to zero or went down to 50 cents or a dollar that used to be 75 bucks. I remember Tilray, people were trading that marijuana stock and it was high as 300 bucks. And today I don't know what it's trading for, but let me look it up. I'm just curious. If you look at Tilray now, it's trading for $2 a share. It's trading for $2 a share. Okay. And so at its prime, that stock, I mean, whew, it was going as much as $300 a share. Now, just imagine if you put your life savings and all your money into it and you didn't deploy an option strategy to minimize your risk and say, hey, I can't lose more than this because I have the correct advanced option strategy, a strategy paired with owning the stock. And so it really can help with risk management, whether you own the stock or you own the option, because we talked about how if you own one option, you can use another option to bring in up to 50% of your money back or up to 50% of your potential profit up front while you wait. And so effectively, what I'm trying to tell you is sometimes with the correct option strategy, I don't have to look at the prices on the option chain, but you can limit your risk up to 50% of what you put into a trade. So you can walk away or sleep at night knowing I can't lose more than 50% of this. But also, sometimes that's what makes people not so interested in it is because they're like, but I can't make more than 50%. But if you think about your trading, if you think about the lifespan of an investor or a stock trader, option trader, it's not about can you make more than 50% all the time. It's more about can you not lose more than 50% because you can only lose 50% twice for the most part. Half of your account before the entire thing is gone. And so if you can put something in place to where you're like, wait a minute, no matter what happens, I live to trade another day. No matter what happens, I for sure have guaranteed money that will allow me to continue trading no matter what happens with this trade. That is a better risk management position to be in versus I hope it continues going up. Or if you're trading options and you're buying puts and you're like, I hope it continues going down. Because we all know it can move three different ways, up, down, and sideways. And if it doesn't go in the direction that you think, you could lose all of your money, whether that's the stock going out of business or from 300 to $2 like Tilray, or whether that's the option expiring worthless. And so you want to understand how you can manage your risk with your stock, with your options by using two or more options. Not the stuff that these kids are doing, which is gambling, buying a 50 cents option, a 10-cent option, and hoping they hit big by Friday. We're talking about you got 1,000 plus into a trade. You want to reduce your risk by up to 50%. Options are the way to do it. The last two things I want to talk about is time commitment and psychological stress. So time commitment is you work a job and you're like, I can't be in front of the computer all day. But if this goes against me or something happens, I need to be able to see what's going on with the stock market. When you use two or more options in an advanced option strategy, you give yourself what I like to call breathing room, meaning, let's just say there's a stock that I have $10,000 in. If I can bring in $5,000 to reduce my risk up to 50%, then that gives me, when I talk about time commitment as well as the psychological stress, like I don't have to be glued to the screen because I know that in any given day, I could lose $1,000 a day, 5 days in a row before I need to look at it and see what's going on. I know that I could lose $2,500 in a day and I don't have to be glued to the screen because I already brought in 50% of my money. I brought in $5,000. Does that make sense? Is from a time commitment standpoint, you don't have to be glued to the screen, watching it all day. From a psychological stress standpoint, you don't have to be worrying about what if I'm wrong? Did I make the right decision? Did I buy the right stock? Did I buy the right option? You could put yourselves in the position where it's not about being 100% right or 100% wrong, but it's about saying, I can't be more than 50% wrong. I can't lose more than 50% of $1,000 I put in, or whatever the case may be. And that is a more powerful position to know that number one, you can't lose more than 50%. Number two, you have a 50% cushion. Like in that example, think about it. If I put up $10,000 and I was able to bring 5,000 of it back, so number one, I reduced my risk by 50%. Because I brought in $5,000, I also can't lose more than $5,000 if the whole trade went against me. However, only if half the trade went against me, if went against me 50%, I'd be down 5,000, but I brought in 5,000. So the trade could go against me up to $5,000 and I still have the ability to get out and break even. That changes the game from a psychological stress standpoint to know that I got a $5 cushion, and down to that $5 cushion, I could break even. And if it falls even further than that, I can't lose more than 50% of my account, up to, depending on the option, the strategy, and what the prices are going for at that time. And so that is the power and the edge that options gives you. More importantly, advanced options. So we're going to be talking about advanced options and advanced option strategies over the next couple of episodes. So tune in. If you're listening to this in the future, make sure you check out the next few episodes, because then we're going to start diving into some of the specific advanced options that can protect you from some of the things that you heard in this episode. So I'll see you in the next one.